Folks, I told you it was going to happen, and here we are. We're talking about the Robinhood portfolio today. A little bit of a weekly update. We'll see where we're falling on the week and compare it to the market. See what some of the movers were this week and some of the additions we were able to bring to this portfolio. So here we are. Obviously, this as the last time you saw it, it's a little bit less. Can't lie to you. I'm sitting here at $34,690. In the last week, we've seen an increase of 1.47%, and in the last month, we've dipped 2%. So, pretty bad in that aspect. But the last week, we've made up some ground, at least a little bit. If you compare that to the market itself, you see the Dow Jones in the last 5 days is up 0.62. So we are beating that at least. But on a 1 month basis, they're only down 1.86. So we're down a little bit further than that. The S&P 500, on the other hand, up 0.51 and down 1.2 in the last month. So, good and bad there. We're outperforming the week, and the NASDAQ, very minimal movement this week, all things considered. It's been very volatile, undoubtedly, if you look over the past month here. There's been volatility all over the place for the NASDAQ. So down 0.54 in the last month and up 0.02 this week, so flat this week. We've seen some progress, though. It's okay. Past 3 months we're down. Don't worry, we're down. We're getting hammered. Look, here's the thing. We're getting schmammered in my Robinhood portfolio lately. Why? I think there's a couple key players here. You look at some of the stocks that have been down lately. You've seen Facebook. Let's look. In the last week, Facebook, prior to today, is down pretty big, down 1.75. The last month, down 4% alone in one of my biggest positions. Apple hasn't seen the greatest month either, down 1.57 in the last month. Not a great month for it. Pretty good on the week, but the month hasn't been great. Big tech stocks have kind of been getting hit hard. In the positive direction, we have Ford in the last week, saw a 5.2% gain, but in the last month, only up 3.77. So it's a positive winner for me, all things considered. So we have a lot of positives, negatives, getting hammered. But again, there's a lot of Stitch Fix too. You look on the week on Stitch Fix. This has been a nice one. Big jump here, 25% jump in Stitch Fix this week. Hey, we're taking that. That's a big winner for me. So, again, as I mentioned, this portfolio is a lot more focused on dividends at this point. And we've got a lot of capital gain to be had here. And obviously, if you want me to do a full unveil again of the positions and cost basis, I will be glad to do that. Let me know if that's what you want to see. Otherwise, I'll stick to doing these weekly, small little updates. And we'll talk about the dividends earned at the end of the month as well. Every single month at the end of the month, we'll be talking about the dividends we earn in this portfolio, which, smaller month for us, all things considered, but it's gaining. Let me just tell you, the momentum is gaining on this portfolio in terms of dividends. What did we buy this week? Well, reinvested dividends, obviously, so that's a key thing. We earned a couple nice dividends. But as far as positions themselves, some are going to call me crazy here, right? They're going to call me crazy because I did it. USOI, I went ahead and I bought some USOI, $50 worth of USOI, equivalent to 9.5 shares. This thing pays a ridiculous dividend yield. It's going to be a very small position for me, all things considered, as you can see, as we have really only $250 worth of an investment there. So it's not a very massive position, but we've got it. And we also added a new position this month, and really this week, and it's going to be the one you all know and love, QILD, Global X Funds, Global X NASDAQ 100 covered call ETF. You know it. Only bought $50 worth of QILD here. It's going to be another smaller position for me again. Covered call ETFs aren't necessarily my thing. Obviously, a lot more risk ensues with these, and you look over obviously the last 5 years where you've seen only a 1% gain when the total market's done a lot better. But the yield on this one is fantastic. It's yielding 9+% typically. So I'm definitely looking to more of a equity-focused portfolio here as we grow in dollar value. We're going to be trying to earn a lot more equity, and there's a lot of reasons for it. I have dividend reinvestment on all of my positions because of the fact that I want them to pay more in dividends. So the more they pay out in dividends, the more I earn in terms of shares, and so on and so forth. It compounds and it gets beautiful. And then we enjoy capital gains in the meantime while we can. With some day trading that we've done, you've seen Tattooed Chef. We made a good profit on Tattooed Chef, both off of calls, call options, and just owning some stock as well. But that is the weekly update for the Robinhood portfolio. I hope you enjoyed it. All time now, we're sitting up at 82.53%, and this is as of July of 2017. So we'll take it. $15,000 in the books. We love it. I mean, I personally love nearly doubling my money in the span of 4 years. I mean, I like it, but I don't know if you do. So we're going to keep at it. Hope you enjoy this one. Have a great day.